Hi everyone, today let's talk about the debt limit again. I guess we'll just talk about this every day until it gets solved, but there was some progress today and it did affect the markets directly, so we'll talk about what they said. Then we'll go over economic factors, as well as Max Payne. Then we'll get into the charts. Then we'll go over my results for the day and my positions going into tomorrow's session. I definitely got squeezed on the day. Don't forget to check out the Patreon. And if you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So both Biden and Kevin McCarthy, the Speaker of the House, came out today and said that they don't think we're going to default on the U.S. debt, which is more positive than what we've been hearing. We talked about this a little bit yesterday, but they were still kind of on the fence. But today they both made statements and said that we are going to come to an agreement before the deadline. And they both said this in their own ways. Kevin McCarthy came out and said he doesn't think we're going to default. Joe Biden said they're going to come together because there's no alternative, and every leader in the room understands the consequences of failure. McCarthy also refrained from saying he was optimistic, but he was encouraged by Biden's willingness to negotiate. This is definitely an improvement from what we heard before, because Biden was saying he wanted a debt limit raise without any conditions, and the House of Representatives did pass a bill that had some conditions on it, so that was always an option. But it seemed like that was an original negotiating point, and then we'll see what the ultimate bill comes out to be, hopefully before 1 June. Moving over to the economic calendar, you can see building permits was lower than expectation, but not by much, so fairly encouraging there. Home starts higher than expectation. Crude oil inventories was very high at 5 million barrels. And then looking at tomorrow here, we have jobless claims. This has been ticking higher, which is interesting. Philadelphia Fed manufacturing, both of those are at 830. And then later in the day, we have existing home sales expected to be 4.3 million. Looking at earnings for today, there really wasn't much here, but TJ Maxx missed on revenue, Target missed on revenue, both of them beat on earnings. Cisco beat on both accounts. Looking at tomorrow here, pre-market, we have Walmart and Baba. In the evening, we have Ross and Bath & Body Works. Again, pretty much coming to the end of earnings season. Moving over to the Fed futures, I do want to highlight the fact that we continue to drift towards the fact that we're going to get another 25 basis points in June, which is pretty interesting. You can see previous chances from last week, 99% pause, 0.4% hike. Now we're all the way down to almost 70-30. And then if we go down to September, you can see we're still at a pause now instead of a cut as our most likely. And then looking down at November here, this would potentially be our first cut based on what the market is pricing in right now. You can see how that's moved up dramatically. It was at 19%, and now it's at 42% for one cut from current levels. Again, that would be two cuts if we got another hike in June, but I would guess that if we did get a hike in June, that these numbers would definitely adjust based on that information. Moving over to Max Payne, we had a big jump in the markets here today. So we're up around 415 on the SPY, up right at this peak pretty much. And now we're between that first substantial put strike here at 410 and then that first substantial call here at 420. Max Payne is still down here at 405, so we could certainly see this move lower. But honestly, I still think 410 is going to be the low for the week. And it does seem more likely now that we've seen that big move up today. 420 seems like a nice high point. I don't think we'll get above that level. And it certainly would not surprise me if we ended up finishing somewhere in here, 417, 418 on the week. Certainly possible. We also have a nice dip here at 412, so a slight move lower from here. And then if we drift past that 410 level, which I think is unlikely, we could certainly go towards that Max Payne at 405. And I would expect to finish here 406, 407 at the end of Friday. Moving over to the charts here, looking at the SPY on the hour and the 12-hour, we talked about if this 410.54 level held, then we would potentially be looking for a move back up to 414.69. You can see we blew through that level, came back and retested it here, found a little bit of a rally into the end of the session. Now we'll see if this comes back through in tomorrow's session. If it does, I would expect we'll move back into this previous range, 412, with 410.54 being support. You can see what this looks like here on the 12-hour chart. We're back in this range. We're back into this trend. We tested these lower levels, found support based on that news. Now we're back in this area looking at 418.12 as the next level of resistance to the upside. if this 414.69 level holds. Moving over to the NASDAQ here on the hour and the daily, you can see we broke out here, got above my 330 level, took out these shorter term trend resistance. Now we're in this next upper zone, looking at 332.28 as my next upper level. This is also the gap fill going back to August of last year. We're within striking range here, and I certainly expect that we're going to hit that before we get any kind of major downturn. Again, I still don't think that that's going to take place until next week, but we'll see what happens. This is still clearly a rising wedge to me, and we're still in that trade, so we're going higher. Certainly could break out here. Oftentimes, before you get a major downturn, that big breakout wick to squeeze all of the short sellers and generate as much liquidity as they can to get that more significant down move. So we'll see how that all plays out. I still think we might see overbought conditions here on the daily chart as well. Momentum, definitely bullish. RSI, also bullish. Momentum on the hourly fading slightly, but still very bullish for trend. Moving over to the IWM and the Dow, you can see the Russell broke out from this next level. It's now at 176.21, looking at 177.33 to the upside, where all the EMAs and SMAs here on the 4-hour chart. Momentum is bullish, RSI is bullish. Got a little bit of a bump from the regional banks. They seem to be seeing a little bit more stability here today, which is definitely bullish for the Russell. Dow, on the other hand, still in this range, testing trend resistance. We'll see if this holds or if it breaks down from here back down to 332.44. That would be interesting. Momentum is bullish, RSI is bullish, and we saw a nice volume pop here today, so certainly could look for that breakout. Next upper level is 335.91, and then above that we have 339.11. Moving over to the equal weighted S&Ps with the regular SPY laid over top of it. We've talked about this divergence multiple times. You can see right here, March 14th and 15th, the SPY started moving much higher, whereas the equal weighted ETF is still trapped in this wedge. But it is worth noting here that we are at this support level. We tested it yesterday, found support there again, and now we're back into this EMA, SMA type zone. We're also at resistance here at 142.50. So I'll be watching this one fairly closely. If this starts to turn up and we see both of these moving in the same direction, that might be at least short-term bullish. I don't necessarily think it's going to break out and really catch up to the SPY. I think big tech is really just driving the regular S&Ps too high, too fast. But it is worth noting how much volume here we saw on the equal weighted ETF, and we did step towards bullish momentum. So I'll be watching this one. It does seem like the equal weighted S&Ps are at least starting to move in the same direction as the regular SPY. Moving over to Apple and Tesla. Apple, a little bit more interesting here today. We broke down from trend support, tested the 55, tested my 170.90 level, and then rallied basically through the rest of the day all the way up to the 21 EMA at 172.77. Still moving sideways, still above my horizontal support. Momentum is actually starting to tick more towards bullish here on Apple, which is interesting. And if we do start to see some follow through on this move, that would be very bullish for the major indices. So keeping an eye on Apple here for tomorrow. Tesla continues to be trapped between the 144 and the 55 EMAs here on the 4-hour chart. Threw some wicks to the downside, pushed back into this zone, still below 144. So 167.34 to the downside, 177.70 as resistance at the upside, right next to the 200 SMA on the 4-hour chart. Moving over to AMD and Alphabet, no change to the thesis here, still super bullish, still making higher highs. You could argue that AMD is a little bit more bullish here. Google lacking momentum, but still making higher highs. RSI definitely overbought, but like I said, both of these trends are intact and you have to respect that until it breaks. Moving over to Snowflake and Nvidia, you can see Snowflake getting that continuation, continues to make higher highs, momentum, still bullish, making new 52-week highs here, looking at 304.55 for your next resistance. If that breaks, then there's quite a bit of room up here to 313.68. So be watching this one. It looks very bullish here. Trend is definitely continuing. Did hit overbought conditions here on the 12-hour chart. But look at this volume here over the last month or so. Huge, huge volume, continuing higher. And you would expect that this is going to make new highs here pretty soon. And to do that, we would need to get up to 345.99. So around another $43 of upside before we make new highs. Moving over to staples and discretionary here, you can see staples breaking down further. Discretionary breaking out of my supply zone, retesting resistance. Looks like it's going higher. So overall, definitely a role reversal, staple breaking down, discretionary, making new highs, which means we're probably moving towards a little bit more risk on environment here, at least in the short term. Moving over to best and worst sectors, again, oil and gas was the best sector. Looked very good here today. This zone continues to hold. This looks like a clear long-term double bottom. Could be setting up for a pretty significant move over the next couple days to a couple weeks. So keeping an eye on this one. Strong support here at 116.64, and we are above my next level at 120.57 here on after hours pricing. So if this holds, I think we'll get up here to retest VWAP at 123.19. So bullish here on oil and gas. Utilities, again, continues to waterfall off, taking out the next lower level and then testing that next one. And you can see we're in this zone here now. Again, indicating that we're going a little bit more risk on as people start to exit utilities. Moving over to transports, you can see we bounced off of that trend line. We talked about this being key support, and sure enough, we got a gap up and a rally. And now here on the hourly chart, you can see we're at this trend line. Not sure why these trend lines are so different on these charts, but we're definitely at resistance, marking these previous highs. We'll see what happens here. If this breaks out, that would be super bullish. And it certainly seems like we could at least get up here to retest these previous highs, somewhere around 228.17. That would be interesting. Momentum flipped bullish. Daily chart RSI also flipped bullish on strong volume. Again, so it looks like we're probably going higher tomorrow based on everything so far. Moving over here to semis, you can see these rocketed higher here today. We were looking at this candle for yesterday as a potential rejection candle at these previous highs. We ended up gapping higher and rallying, taking out 228.63. So next resistance is 133.32. We also have this previous high at 131.70. Overall, looking super bullish going into tomorrow's session. Moving over to stocks above the 50 and 200-day averages here. You can see we did get a reversal on both charts, and that was a pretty solid gap higher here on the 200-day average. But looking at RSI, you can see we're testing that SMA. I'll be looking at tomorrow's charts to see if we get above this SMA and start to move higher. That would be interesting. But otherwise, we're still chopping in this zone. We're still above my 40 support on the 50-day average. We did get back above my 43.55 level here on the 200-day average. Moving over to the dollar here, you can see we continue higher. Got that very powerful rally, tested this lower level at this pause at around 102.20, and then rallied all the way up to my next level, tested that, and then broke down here. We're above the 200 on the 12-hour, and I would expect that this is going to continue higher. We'll keep an eye on this, but it's interesting to see the equities going higher and the dollar going higher at the same time. Definitely interesting to see here. Moving over to J&K and TLT, I just want to highlight that both of these are not participating in the rally right now. You can see J&K throwing a huge wick, hitting VWAP in the 9 EMA on the 4-hour chart, and my 91 level, getting a strong rejection. And if this continues to go lower while equities are going higher, that's going to be a pretty bearish signal in my opinion. Moving over to TLT, similar thesis. We continue to test support. If this level breaks, basically right where we're at, I would expect we're going to go much lower pretty fast. This has been a pretty powerful trend line so far. And like I said, if it does break, we'll go much lower. It is worth noting that RSI does look fairly bullish. We got through the SMA, retested it here, and now we're back above the SMA, which generally indicates that this is going to be at least a shorter term bottom on TLT. Moving over to the VIX on the 2-hour and the 12-hour, no surprises here. We move much lower, but it is still a higher low versus Friday the 12th. Certainly could go lower down to 1575 and reach that level. That would be interesting. Looking at the daily chart here, you can see big red bar, fairly close to these previous closes. We'll see what happens, but momentum is definitely bearish on the VIX going into tomorrow's session, and it could certainly go down to that 1575 level. Moving over to my accounts here, you can see I was down around $200. I think it ended up to be around $260, so not great. Did do well on my IRA because I just had the one put in there, which obviously did well on the day. NASDAQ was up more than 1%, and that kind of a move does tend to put me in a position where I'm going to lose some money when I am neutral going into the day. I did play some decent defense, so it wasn't horrible, but definitely could have done a little bit better. Looking at tomorrow here, I do have some 227 and 228 puts, as well as a 229 put. And then calls, I have a 333 and 334. Only 3 calls versus 5 puts, so bullish on that. And then looking 2 days out to the Friday expiration, I have a 327 and a 334. Already in a little bit of a loss there on that call position. So we'll see how this plays out. I don't really want to hold any positions over the weekend because of that options expiration, but we'll see how that plays out depending on the price action we see going into the Friday close. Overall, neutral to bullish going into tomorrow's session. Let me know down in the comments section if you think we're going to come to a compromise on the federal debt by 1 June. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.